Today, Bitcoin bounces back above $71,000. SEC Chair Gary Gensler tells CNBC what made the agency approve a rule change to open the door for spot Ether ETFs. And Coinbase's chief policy officer explains what made the crypto exchange pour another $25 million into a digital asset super PAC. It's another day of gains for Bitcoin as the cryptocurrency crossed back above $71,000 by noon Eastern. Ether is also in the green, although moving up just 0.1%. Solana rose today too, gaining 4%. Okay, let's talk about the top stories. SEC Chair Gary Gensler joined CNBC's Squawk on the Street this morning from the floor of the New York Stock Exchange, where he discussed what prompted the SEC to approve a rule change late last month that would pave the way for spot Ether ETFs.
We have in the U.S. already a way that you can invest in various underlying securities and underlying commodities called exchange-traded products. In January, we approved an exchange-traded product on Bitcoin. And about a week and a half ago, similar filings to list on the New York Stock Exchange, list on NASDAQ and the like, exchange-traded products on Ethereum. Ethereum had been traded on the Chicago Mercantile Exchange futures for 3+ years, and the staff looked at that closely, and that was approved. Now, the underlying exchange-traded products still need to go through a process to have the disclosure about that. And that will take some time, but they're working on that.
Now, Gensler also discussed crypto markets more broadly this morning, saying that tokens have not offered investors the disclosures that are needed and required by law.
We, the SEC, tomorrow are turning 90. Happy birthday, SEC, 90. And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges, like here, this floor of the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. And so you've seen the bankruptcies in this space. And there are some of the most leading lights in this field are either in jail, about to go to jail, or waiting extradition.
Next, FTX has reached an agreement to settle $24 billion in claims from the IRS. In a court filing submitted on Monday, the bankrupt crypto exchange proposed a $200 million payment to the agency as a priority tax claim, then another $685 million payment that would come after the exchange pays back customers and creditors. Lawyers for FTX said the agreement eliminates a significant litigation risk and provides certainty for creditor and customer recoveries. FTX proposed a plan back in May that would allow most customers to get all their money back. The plan says that those with claims of $50,000 or less, that's about 98% of its customers, will get 118% of their claim amount. As for the settlement with the IRS, the bankruptcy court still has to approve the plan. All right, focusing on crypto regulation for our main story. I spoke with Faryar Shirzad, Chief Policy Officer at Coinbase, about recent developments in the U.S. and the crypto exchange's latest multi-million-dollar contribution to a digital asset super PAC. On Monday, Coinbase announced it was pouring another $25 million into crypto super PAC Fairshake. Last week, blockchain firm Ripple and Web3-focused crypto venture firm A16Z also pumped another $25 million each into the PAC. In a blog post, CEO Brian Armstrong noted that Coinbase's latest contribution brought the total Fairshake and its affiliates have raised to $160 million in this election cycle, making it one of the largest super PACs. What does that signal to you, and what are you hoping is achieved in Washington with this money?
I'll tell you, there are 52 million Americans who bought crypto, and their voice has largely been ignored in Washington for years now. And so we at Coinbase and a number of other peer institutions decided to get together and try to get the community to finally have a voice. So part of that has been funding Fairshake, the super PAC. And the other part of it, which we're very excited about, is funding the creation of an independent organization called Stand With Crypto, which is a grassroots organization, which today, very shortly, should hit 1 million advocates signed up to advocate for good crypto policy and good for pro-crypto candidates. And So it's a big landmark day today. We're very excited about it.
Now, we have seen some major regulatory advancements from Congress in recent weeks. In fact, last month, 71 Democrats joined 208 Republicans in voting yes for the Financial Innovation and Technology for the 21st Century Act, crypto market structure bill. What do you make of that development, and what do you think will happen with this legislation?
Well, it underscores something we've known all along, which is crypto is not a partisan issue. I think Democrats and Republicans, when they evaluate what needs to be done from a policy perspective, generally seem to come on board. In particular, when we bring constituents out to meet with members. We had, of the 71 Democrats who voted for the legislation, I think 33 of them, we had constituents from their districts who are crypto founders and innovators come meet with them, and every one of them voted for the bill. So I think crypto's moment's arrived. I think the merits of crypto being built in the U.S. have always been kind of unassailable and obvious, and now the politics are catching up to the merits. And we get a huge result in the House, and very excited to see what happens in the Senate.
Now, the Biden administration publicly said that it opposes the passage of the Fit for the 21st Century Act, but signaled the president will sign the bill if Congress passes it. Now, we're seeing crypto getting more focused this election cycle. In fact, last month, the Trump campaign announced it will start accepting crypto donations. And Trump isn't the first presidential candidate to accept crypto donations. Robert F. Kennedy Jr., who is mounting a long-shot independent bid, announced last year that his campaign would accept Bitcoin contributions. Now, according to a Harris poll in partnership with Grayscale, American voters increasingly want to support a political candidate who is knowledgeable about crypto. So what do you think is behind the political shift we're seeing play out here?
Well, there's been a lot of polling on this. Young people are largely disaffected with the financial system as it exists now. I think most Americans are, but it's particularly strong among young Americans. And when you have a subset like that, it's particularly important for electoral purposes, really be unhappy with the system and recognize that crypto provides an alternative, it becomes quite powerful. You have a generation of Americans who've grown up in a digitally native fashion. They're accustomed to transacting, socializing, learning, engaging online in digital form. Crypto is the technology that allows you to not only pass and trade information, but also to trade items of value in tokenized form. And so I think young people get it. I think older people are beginning to get it. And I think that generational shift is going to shift politics dramatically. And we're seeing a lot of that happen right now.
Now, turning to another recent development, the SEC approved a rule change about 2 weeks ago that would pave the way for spot Ether ETFs. I heard you call the development an important step towards regulatory clarity and mainstream adoption of Ethereum. Were you surprised by the SEC's approval of a rule change? And what else does this move signify, especially as it pertains to the SEC, which many believe has taken an aggressive stance against the crypto industry in the past?
Well, on the merits, it wasn't a surprise at all. The denial of SEC's denial of a Bitcoin ETF ultimately had to go to the courts. The court said that the decision to deny that one was arbitrary, capricious, and an abuse of power. The merits of the ETH ETF were identical to the Bitcoin ETF, and so there's really no legal basis for them to deny it. So to the extent we were surprised, there's a degree to which this SEC is trying to sow chaos in the industry. And so there was a risk that they would try to do the same by just denying this and have the courts force their hands. But they ultimately decided to do the right thing, approve the ETF. And it's a big unlock for people who want to access crypto through traditional brokerages to be able to do that. Our view is very much the rising tide lifts all boats. Crypto adoption is good for the American people, but it's good for our business, and we feel very excited about it.
Now, many of the potential Ether ETF issuers chose Coinbase as their custodian. According to JMP Securities, Coinbase could see benefits to its transaction, custody, and staking businesses from these ETFs. What would you say this development means for Coinbase specifically?
Well, crypto is a broad Web3 and crypto platform. So we're obviously an exchange, but we're also a custodian. We provide prime brokerage services. So there's a range of different ways we interact with the ETF. What we found with the Bitcoin one is that the market volume and market activity increased on our exchange even as the ETFs came online. So there was a complementary synergy between those two things. I'm hopeful that we'll have something like that happen once the ETFs actually come online. But it also brings a whole new slew of Americans into the crypto economy that begin to get accustomed to and learn about how you can move digital tokens of value seamlessly, almost without any cost. And the potential for that to tokenize a broad range of other activities is enormous. You've got countries like Brazil who are engaged in national strategies to try to tokenize their economies broadly. And all of that starts with a single step. And we're taking a lot of really important steps here in the U.S. to take us down that road. And we're pleased to play a big role in that.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.